Hello everyone, this is the pre-market report video for today 13th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Last night there was really a strange thing happened in US market. I mean the broader market was really very much positive but not the same case in index. For example, for the entire New York Stock Exchange listed stocks, the advanced return ratio was 4.3:1, meaning for every one stock down, 4.3 number of stocks increased. In Indian market in the last 2 years, I never saw an advanced return ratio over 2. Last night in US it was 4.3. As I said, that was very much positive but not the same thing on index. First of all, let's take S&P 500. It opened on a flat note. Then around 10 a.m. Eastern Time, Goldman Sachs upgraded the S&P 500 dividend growth to 6%. In comparison, previously they said they expect to grow 4%. This lifted the sentiment and increased the S&P 500 to around 0.5%. We know we discussed in the last video, last Friday for the first time in the history, S&P 500 closed above the 5,000 mark. Similarly, Nasdaq moved above 16,000 mark for the first time after 2021 and it reached the new all-time high value. However, somewhere in the afternoon time, another FOMC member made the statement that the rate cut was not at all in the table. This statement was the trigger point. We know tonight US government is going to release their January month consumer inflation data, and following that on coming Thursday night again US government is going to release the January month retail sales data. Now these two macros will heavily influence the interest rate cut tool prediction, and then that tool probability will influence the stock market. So it's obvious conservative investors won't hold their position tonight since the data will be released before their market opening. Hence, this inflation fear and Nasdaq crossing the all-time high value kind of caused the profit booking in the second half. So Dow Jones alone increased by 0.33%, whereas S&P 500 was down marginally 0.09% and Nasdaq closed off negative 0.3%. And because of this volatility, VIX increased over 7%. And the value moved to near 14 from below 13. Just repeating the information, only major index didn't perform. However, the broader market was positive based on the advanced decline number. So the global momentum is positive, but still it will trade with some cautiousness. In case of oil as well, today OPEC countries going to release their monthly oil outlook report, like what their expected future oil price, oil demand and oil supply, kind of all those details. Hence, looks like oil traders also waiting for it. So the oil price haven't changed much. At the time of this video, WTI crude trading at $77 per barrel and Brent crude trading at $82 per barrel. Coming to Indian ADR, it's just following the Indian market. Both the banks closed negative, whereas both the IT stocks closed positive. Here, ICICI Bank and Wipro closed more or less same percentage as Indian market, whereas HDFC Bank closed more negative and Infosys closed less positive. And one more thing, usually HDFC Bank and US ADR will have the dollar premium of around 8 to 10% to the spot Indian market HDFC Bank share NSE price. Last night the premium dropped to just 5%. Here I'm just telling this as just information, no prediction or no possible clues, since clearly it's difficult to say whether the Indian market will drop further to restore the historical premium, or will the US ADR increase, or fundamentally the premium dropped to just 5% hereafter, or even will the premium drop further. Regarding GIFT Nifty, at 3 a.m. Indian Standard Time, it further increased and closed at 21,750. At present, the premium is stable and around 80 points, which is kind of indicating 60 points gap up opening. So these were the things happened in the global market. Now let's see the Indian market related info. As most of us know, yesterday Nifty opened on a positive note, but quickly it started to erode continuously throughout and closed near the day's low. It's not just the index, the overall market itself was not good. Earlier I said the advanced return ratio of US stock market was 4.3. In comparison, NSE advanced return ratio was just 0.25. Both the market was both extreme. In fact, yesterday most of the European market and Japanese market all closed flat to positive except India and Pakistan. None of the major market closed negative. Regarding the possible reasons, there are two. First of all, we even discussed this in the last pre-market video. Yesterday alone, in one single day, 480 NSE listed companies released their earnings, mainly small and mid cap, and this week alone over 1000 NSE listed companies going to release their earnings, almost all the mid cap and all the small cap. So profit booking before the earnings, possibly yesterday due to some released earnings like this stock Bharat Forge, which market cap is over 50,000 crore rupees, strong index mid cap, the share price dropped 15% the moment when they released their results. Hence, this broad-based result influence pushed the overall broader market to down. In addition, early morning first thing, RBI issued the circular that today they are going to conduct the 4-day VRR auction for 25,000 crore rupees. Then during the auction time, for that 25,000 crore rupees, the total received bid was over 1,25,000 crore rupees, meaning 5 times more bid was received from Indian banks. Then again in the afternoon, RBI issued the second circular for another 25,000 crore rupees auction, and they conducted those auction also immediately. This sudden emergency back-to-back VRR auction implies that Indian banks were having the very serious liquidity issue, which might possibly negatively impacted all the banking stocks. So the primary reason was earnings related influence, and emergency RBI auction doesn't help either. Sector-wise, only pharma and IT closed positive. All others ended on the negative note, especially public sector bank and media. Whole sector dropped near 5% each. About institution, surprisingly both FII and DII were net buyers. FII net bought for 130 crore rupees, whereas DII net bought for 1700 crore rupees. Moving on, in the aftermarket hours at 5:30 p.m. Indian Standard Time, Ministry of Statistics released the consumer inflation for January month. The data came as 5.1% against expectation of 5.09%. Generally, it's like almost same as analyst expectation. And on the positive side, it's 0.6% below compared to December month. Then it's still within the RBI's target 4% plus or minus 2. In normal times, market might have given some importance to this, but today I think there is a chance market might ignore the Indian inflation data and expect to trade based on the US inflation data, which is due tonight. Finally, very important, today MSCI is going to announce their quarterly review, like what stocks rebalance they are going to apply, which will be effective from March 1st. So far, as per Nuvama, NMDC, Punjab National Bank, BHEL, Union Bank of India and NHPC, these 5 public sector banks expect to receive around 8,300 crore rupees. As a summary, though US market index closed negative, the broader market closed positive, in line with that GIFT Nifty indicating the gap up opening. But the problem is, will it sustain? Since today also near 400 companies going to release their earnings, hence its stock and its index weightage. Also, let's hope no banking stocks related surprise. One more thing, yesterday Paytm Payment Bank requested the RBI to review their proposal again, but RBI rejected it. And so far, only Reliance Jio Financial and HDFC Bank is in the race to acquire the Paytm customers. Now, Axis Bank also joined the race. Moving on, as per stock open interest, Bharat Forge, Ipca Lab, Bandhan Bank, National Aluminium and REC got an increased open interest along with the negative close, indicates the short build-up. On the other hand, HCL Tech, L&T Tech, Coforge, HDFC AMC, Sun Pharma and Voltas got an increased open interest with a positive price close, indicating the long build-up. About the things to look out, Eicher Motors, Hindalco, ZTV, IRCTC, BHEL, Bosch, National Aluminium and Oil India are some of the major Indian companies' earnings results are scheduled to release today. Then regarding global macro, there is nothing that I am aware that are scheduled to release during our market time. But after our market close at 3:30 p.m. Europe's economic sentiment data, and at night for US, very important, US consumer inflation for the January month are the important items we need to keep an eye out today. Coming to technical, Yesterday on the daily chart, Nifty formed a long bearish candle with minor upper and lower shadow. If we combine the Friday candle, then it forms an engulfing pattern with significant volume indicating weakness in the index. So now in the last 1 month period, for multiple times Nifty tried to cross the zone 21,800 to 22,000, but the selling in the higher side keeps on pushing below 21,700. In addition, there was a weakness in the broader market as well. Hence, technical perspective, the short-term trend is negative. However, if we draw the upward sloping trend line by adjoining lows of October 2023 and January 2024, then it shows the strong crucial support at 21,500 to 21,600 level. So, if the index breaks 21,500, then the correction till the January lows 21,125 can't be ruled out, and on the higher side, the resistance will be at 21,800 to 22,000 level. Then, in case of Bank Nifty, it dropped over 750 points and closed below 45,000. Thus, on the daily chart, it also formed long bearish candlestick pattern. And at present, Bank Nifty is retested 200-day exponential moving average 44,680, which always plays a crucial role as a support. Even it supported on January 25th when the HDFC Bank results negative time. Hence, closing below the near-term support zone of 44,680 signaled the bearish sentiment, and it might intensify the selling pressure towards the 44,000 mark. On the upside, the immediate resistance is at 45,100 and a breakthrough could trigger short covering moves towards 45,500 levels. Regarding weekly options, the maximum call option open interest was at 22,000 strike, followed by 22,500 and 21,800 strike, with meaningful new call option writing at 21,900 strike, then 21,700 and 21,800 strike. Thus, from the options data indicating 21,700 to 21,800 is likely to be an resistance zone. Whereas on the put side, the maximum open interest was at 20,800 strike, followed by 21,000 and 21,500 strike, with new put option writing at 20,800 strike, then 21,400 and 21,300 strike. Hence, 21,500 is expected to be the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.